What's up, everybody? Michael Silva here. You're watching the Daily Stock Market Brief. This is the show that I do Monday through Friday, 5 days a week. We use intermarket analysis and technical analysis to get a good idea as to where the market might be headed next. If you're wondering and you're new here and you're like, what's intermarket analysis? Well, we look at four main asset classes. We look at stocks, so the indices. We look at commodities. We look at bonds and yields and the currency, the dollar. Today's show, we got a lot to talk about. It was a choppy day. So much so that I got a little seasick while I was trying to trade. By the way, I have live trading videos coming out. I was going to post one today, but my computer software was getting all laggy, so I think I figured it out. So I should have my first live trading video back starting tomorrow, so keep an eye out for that. Now, before we hop into all the chart decks and really kind of get a good idea as to where the market might be headed next, I need to thank today's sponsor. Every time I get a sponsor, this benefits not only me because, well, I'm compensated to bring public awareness to the company, but also benefits you as well. One, you get to learn about a new company, and two, I remove mid-roll ads on today's episode to make it a more pleasurable viewing experience for all of you. So thank you, HLLPF, for supporting the channel. To learn more about HLLPF, at the end of the episode, I'll be going more in depth into their corporate presentation. But for now, let's go ahead and hop into today's episode. Well, welcome back to the Daily Stock Market Brief Show. Check it out, man, oh man, what a choppy day. And this really matches up with the March seasonality. You just look at this month right here. This is the S&P 500 index seasonality based on a 20-year range ending in 12/31/2020. And you can just see this monster chop, but in April, that's where we see some momentum. So what a horrible day to start day trading, live day trading again for me, you know? Just a choppy day. This is a 2-minute time frame of the SPY. Look at how crazy this is. It's absolutely bonkers, just bouncing back and forth. I know you felt the pressure today if you were trading. Crazy stuff was happening, especially with some retail stocks, including GME. Look at this. This is a 5-minute time frame. The stock gapped up, ripped higher, and fell 50% in the matter of like a half an hour. Holy cow. Talk about just a very unstable market right now. So when I've been talking about you got to be careful in these environments, this is what I mean by you need to be careful in these market environments. When we're looking at the dollar, we thought that, you know, this breakout was holding strong, but you can see that now we closed well below, again, that 92 range. So we didn't get those couple closes up there. So unfortunately, this could be a fake out. But what I want to call out here on the dollar is really looking back toward this little lower high and then this move down from that, from breaking down to this support, that 92, and breaking down. If you match that up with this higher high on the S&P 500, when we started breaking down here, you can see that the S&P 500 really started to make a big run. This was actually also, by the way, right during the presidential election right here, so right in November, pow, right up to the upside, and we really started seeing equities start to scream higher. Also, we started to see digital assets, right, cryptocurrency, start to scream higher as well. Now we're at this inflection point right here where we're kind of getting back in that 92 range. And the last time we flushed through 92, we saw some very strong movements in equities and crypto and you name it. Now we're starting to see it run back into 92. It's holding right now currently as a level of resistance. Didn't even touch the 200-period moving average yet. But this is a sign what we got to keep a close eye on, because if we start heading lower here, well, guess what? That could send equities higher, which would match the script once again for the seasonality on going into April. So I don't know if we're moving in that risk-off environment as of right now. There are a couple things suggesting that we still have downwards pressure, so we're not out of the woods by any means, and we will talk about that here on this brief. Now, another thing I want to call out is the 10-year yield, right? So we started to see it move down a little bit, and guess what took place today in the tech sector? Well, we saw this monster gap up, and then obviously it was a gap up, and then it crashed down. Technology being the worst performing sector, or spider, the XLK, out of the 11 sectors in the S&P 500. So perhaps we're seeing that whole rotation take place as these 10-year yields kind of just trickle around here up at 1.5, which is still relatively high from a big move from the start of 2021. Now, I added here the 5-year because you can see now the 5-year really started to take off here too. And I'm watching this 30-5 spread as it's starting to head lower here as well. By the way, we got to keep an eye out for the potential of inversions with the 10-year. And you can look at the 10s and 2s like this one. That doesn't look like it's going to invert anytime soon here, but potentially you never know what the 5-year and the 10-year might do. And that can also be one to keep a close eye on for a potential inversion in the near future. As I see it right now, these are just steepening completely, heading higher, or maybe taking a little bit of a breath here. So we'll see here what happens with yields in the near future. There's a lot of talk about rotation too going on right now. So I wanted to show the relative rotation graph. This shows us the leading sectors, or what sectors are moving into that leading category, or weakening, or lagging, or improving. And as you can see here, we have materials, we have industrials, financials, and energy for the last 10 trading days sitting in that leading category, but they are kind of wicking downwards, which we might be seeing this rotation. You can see here, utilities kind of creeping itself up in the improving sector. So we got to keep a close eye there, because utilities typically means a more risk-off environment. But like I said, right now we're holding strong in materials, industrials, financials, and financials really benefit from these yields holding high. And then energy has just been a monster player. Now let's hop into the indices. We're going to start off with the Wilshire, and really what needs to be called out here, and why I've been saying we're not quite out of the woods yet to match the April script. We very well might do that, but we close right around the 20-period moving average. And note here, since this high, this all-time high, right around February 15th or 16th, we've still been putting in lower highs, okay? So, and on top of that, the moving averages hasn't fully crossed themselves over. So this could still be somewhat of a stage 3 distribution. If you don't know what that is, you can look up, the 4 stages in the market. There's plenty of material out there on them, but stage 3 is distribution, and you typically see these large range candles move back and forth, and you see these moving averages start to cross over and start to consolidate until we actually get a true breakout, and you can see the moving averages stack and move in just a fluid river flowing up, or potentially even flowing down. So the case for a head and shoulders pattern here on the Wilshire 5000 is still in play. Tomorrow is a very important day for the Wilshire, because we need to see a down day. Well, we don't need to see a down day, but in order for this really to kind of create a and hold as an area of resistance here in these lower highs, we would need to see a down day. So tomorrow is actually quite an important day going in for the stock markets. Now let's go into the S&P 500. We did break out of that area of resistance, and what I've been saying is if we break above that resistance, this descending broadening wedge or megaphone pattern, it could easily send us to 4,000, and that still is a very strong possibility. We have the price percent oscillator crossing itself over right here. What I want to call out though is just this move itself. Like the move itself, like I could still see the possibility for a left shoulder, head, and right shoulder. So we got to be very mindful of that this is not some sort of bull trap, okay? Because we saw a very choppy day, and we have a couple, one gap, 2 gaps right here going into this kind of high point for the right shoulder. Now this candle, you can call this an inverted hammer, potentially shooting star. So we will see what takes place going into tomorrow. But it's a little. I'm not fully convinced here on this breakout yet. And you can see we broke above it, but it wasn't on the strongest set of volume. And we still have a couple gaps below us. So we might get a little fake out retest of the 50 and then move higher. Or, hey, you never know. We might just consolidate here or even scream higher. So be careful in this environment. And when I say be careful, I mean, first off, I showed you the 2-minute chart of the SPY. Now I'll show you the 30-minute chart, but you can still see just a bunch of chop taking place. Now, we did break above this, right? So I can show you that we broke above that megaphone pattern or descending broadening wedge pattern. And we didn't quite create a new high yet, but we hit this previous one. So I spread it down over to here, and you can see it held as resistance. So this could be a little fake out. What we would like to see is just a 391 break and confirm break above that. That would give me a little bit more confidence on this time frame. You can see the 50 period moving average really start to slope up here. Looks like it's going to cross the 200 period as well. Maybe potentially we get a back test of this resistance line, which is now support, and then we continue to move higher. But just keep in mind, these were some big gaps, and typically we do get gaps filled. I think on the daily time frame, we have a total of about 9 gaps since November of last year. Or sorry, yeah, 2020, so not that long. But this is not the structurally greatest stuff, which does set us up for the possibility if we get a head and shoulders neckline break, it could be a pretty aggressive move to fill some of those gaps. Nothing is certain in the markets, but this is just kind of what I'm looking at and what I'm keeping my eyes on. Now let's look at the Dow Jones. Dow Jones, let's hit the celebration button. All-time record high close. We got above the 32,000. We saw continued strength. The price percent oscillator did cross over fully, bullish crossover, and now we're sitting there at all-time highs. So just 1, 2, 3, 3 to 4 days. A big solid move, and look where it pulled down to, okay? It pulled into the 50 period. We started talking about that and how it used this horizontal line here, which is the yearly open for 2021, found it as support, and we just ripped higher. So overall, very, very solid looking as of right now. We have the 20 period above the 50, and that's above the 200. So everything right now is just screaming bullish context. We have higher lows, and now we have higher highs. So everything so far, so good. Nasdaq, the tech sector, a little scary here. You can see the 20 period moving average looks like it's going to cross down through the 50. That's not a great sign for the Qs. We had a monster gap up, and that gap was then filled. So really, if you weren't looking at candlesticks and you just looked at a line chart, you would see today, you'd be like, oh, we were only down 89 cents. So not even a full percentage point. So not a bad day. However, if you look at the candles perspective, we had this big gap up, which I'll get into on the 30-minute time frame. I will mark out exactly and show you why, it held as resistance. But then we crashed right back down pretty much on the low of the day, right back at the 38.2 retracement level. So, if we close a little bit lower, that would be a dark cloud coverage. This is still not the greatest looking candle heading into tomorrow. But keep in mind, we're relatively flat. And when we look at the 30-minute time frame, look at that gap up. So we gapped right into the resistance and then closed down. So we need to take back this resistance to potentially see some more strength come in. But as I see it, we've been putting in lower highs, lower lows. So maybe perhaps we break down from here to fill this gap, or potentially head lower in the Q. So be very mindful of this. Now, we did already state on the seasonality chart that March is very choppy, but on a seasonality perspective on the previous market brief, we brought up a Nasdaq seasonality chart, and still holds true that April, we see some strong rallies. So we also need to be prepared. So there's some strong inflection points here in the markets, so it shouldn't be easy by any means right now. Let's look at the Russell 2000. Also, just a crazy price action. Holy moly. So we pulled down through the 50, right? Look at this channel. We're right here at resistance at 330, back up at the, pretty much all-time high. And then we also bounced from this little channel. So no confirmation of a breakout yet, but we are in bullish context. We have higher lows. We, potentially will get a higher high right here, and we have a price percent oscillator. Does look like it wants to start turning itself up right there to be a bullish crossover. And then from the 30-minute perspective, I want to call out this. It broke out of the descending broadening wedge, similar to the S&P 500. Looks a little bit stronger than the S&P 500 from this perspective. And we have a symmetrical triangle forming. So maybe we break out of this and scream higher going into tomorrow to take out that all-time high of 230. Or maybe this also might be that, bear or bull trap where we head lower. But overall, I mean, you have a strong move to the upside. You have this period of consolidation. It looks like it can easily break out to the upside. We took out this previously low point. So right now we have a low, 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 and now a higher low that just took place. So that is a good sign so far. Now let's hop into some stock market indicators. Not much to go over in the indicator section. All right, so we're going to first start off by looking at breadth. So this is the Nye McClellan oscillator. We saw a big move today up to 19.89. It's by no means an overextended move to the upside, okay, but it is back in positive territory. What is interesting, we did see this very similar take place where we had the negative and we moved to positive and then negative and then positive. Well, we're moving a lot faster into a positive here in the 2021 script. So perhaps this negative divergence then breaks and we no longer need to look at this negative divergence. So we'll see. Keep in mind too, on these pullbacks, what you want to see typically, like we saw this big pullback here, is you can see these big bursts, that go above 60, and we see these kind of bursts of energy where we get these more continued strength moves to the upside. So we'll be on the lookout for that as well. Now, I'm not surprised the other day that we saw tech stocks bounce because we've been calling out this positive divergence on the BP charts. And now it's set up still where we still have the potential to go up higher. Notice how we're at 44.04. So we're not oversold anymore, but it is still trending up at this specific point. So I'm looking at this trend line now to potentially act as a little bit level of resistance. You can see it was a high here all the way down. So that would put us right around 50. So if we start cracking above that, we might, that could be that April script where we see it break above 50 and potentially get into that overbought territory. But we'll keep an eye on that as time goes, but nothing's overextended at this particular point in time on the chart anymore. Now, when we look at the CPC, I just wanted to call out, we, had the sell signal. Now we're seeing some strength. This, we saw this big spike to the downside today. So maybe we get some more continued moment. This would bring this back down, and that's considered the warning. And then we would just be on the lookout again, once again, to see if it crosses back above 8 or 0.8. Now let's look at some commodities. We're going to first start off by gold. Gold closed on its high today. So overall, pretty solid bounce so far from the low portion of this channel. By no means we're out of the woods yet. We are getting from that oversold. Now we're just trending a little bit higher, so we're no longer oversold there. The price percent oscillator does look like it wants to cross over, but we've been faked out here, here, and here. So perhaps we might get faked out again. Let's be careful here. I am positioned. I did buy into some more miners when we came into this point. I've been marking that as one of my targets based on a yearly perspective, fib level readings. Then we got silver. Silver still struggles to get above the 50% retracement level. So let's look to see if we can get a breakout there. The rate of change actually headed lower today, even though that we saw, we did see a slight down day, but relatively flat overall, down 5 cents. So a relatively boring day there in silver. Bitcoin, however, Bitcoin broke out of this area of resistance, and I said this looks like a good trade. I think it can easily come back to touch the previous all-time high, and what do you know? We came and touched it. We didn't quite wick, all the way to the uptime high, but we basically did right around 56,380. No, that was 57,500. Sorry, I'm reading the chart data right here onto this candle, but the previous candle did reach up to 57,500. So now maybe we potentially break out from that area. We will see. Now, oil, not too much going on there, but it was a couple of rowdy 2 days where we came from 68 and saw a drawdown to 64. And we were saying that if we break down from this level successfully, we can see it head easily down into 60. But as you can see here, it closed right on 60 on this area of support, and then today it closed right back above it and it opened right on it. So it's just kind of treading around this area of support. Perhaps we get the breakdown tomorrow, or this was a little subtle pullback to potentially scream to make another all-time high. I mean, the context of the chart, we have the 50, the 200, nice spread. We have higher lows and higher highs. So that just puts energy in a place to win, not just energy, but also oil, as you can see here. All right, so just to wrap up my thoughts for the trading day before we get into today's sponsor in more detail, I am keeping a very close eye on the March seasonality script here. It says there's going to be chop, and April we can see some strength come in. So I'm really kind of just playing it careful here and then seeing what April brings. We have some inflection points, as I stated, and the possibility for the market to still turn around where we're seeing the Wilshire and the S&P 500 have these head and shoulder patterns. And then we have the Qs, the Nasdaq. We're hearing a lot about this rotation out of tech, and you can see when the yields rise, there's been pressure on tech. So, it's just a very confusing time at this moment. Perhaps the passing of stimulus can bring more enthusiasm into the markets heading into April, so that can add to the, this seasonality script here. So my eyes are really on April, and we will kind of go from there. But as stated, I will constantly just bring out new updates, see what's going on in the markets, and I will bring out my more of those daily trading videos here starting tomorrow and then continuing here into the future. All right, so let's go ahead and learn more about today's sponsor, HLLPF. They are traded on the Canadian Stock Exchange under ticker symbol HP, and in the US markets, the OTC markets, under HLLPF. I do not have my own personal money invested at this time with HLLPF, and I am being compensated to bring public awareness to this company. Now, if you're wondering what HLLPF is, well, it is a Chinese and Middle East focused social media live streaming app with record revenues throughout 2021. It has 5.4 million active users from 200 countries and 15K daily live streams. So they have a positive cash flow and a new crypto mining business avenue for potential even more growth. These are the management and directors leading the charge for HLLPF's recent success. You can see here their monthly revenues. In January of 2020, it was a meager 200,000 Canadian dollars, but now as of January 2021, a year later, monthly revenues are now 2.5 million Canadian dollars. So we're seeing 900% revenue growth. So that is a big move in a short period of time. HLLPF is also backed by one of Asia's top 5 venture capital firms, New Margin Ventures. So as the user base continues to grow, instead of HLLPF just focusing on communication between existing people, networks, and friends, kind of like Facebook and Twitter does, HLLPF is designed to allow complete strangers from all around the world through its translation technology. It'll allow you to talk to other people in different languages and have that translated back and forth. And you can join live streams and give gifts to the hosts and receive virtual goods, which users can purchase from the app. So instead of just focusing on the saturated North American scene, HLLPF offers some diversification into a market of 1.4 billion people in China alone. HLLPF joined the cryptocurrency mining movement. It announced expansion of the partnership with Shanghai Yateng Data Technology to launch the crypto mining initiative. This will give HLLPF users the ability to participate in Bitcoin and Ethereum simply and conveniently. So as a first step into the initiative, they purchased, by they, I mean HLLPF purchased several Bitcoin and Ethereum mining machines and plans to purchase more. With each crypto machine purchase, all users can now mine BTC and Ethereum to learn and create value within their own crypto wallets on this specific platform. A quote from Mr. Wang, who is the interim CEO and director, he said, "It has long been our intention for cryptocurrency to play a central part on our platform, especially given the borderless nature of cryptocurrency and our international nature." He then went on to say the recent activity and interest in cryptocurrency presents us with a unique opportunity to introduce cryptocurrency to our users, as well as to bring cryptocurrency users to our platform. Now, in recent news, HLLPF announced a proposed transaction to acquire interest in Dogecoin/Litecoin mining facilities and mining assets as private placement to raise up to 5 million Canadian dollars by way of subscription receipts. So some interesting and positive news coming out, looking for additional streams of revenue. So with millions of users growing fast, the robust language and live streaming capabilities, and the crypto connection, HLLPF is a company that is poised for the potential relentless expansion in this digital age. Now, I wanted to just pull up a chart of this company. I'm looking at the ticker symbol HLLPF here. This is in the OTC market. And what's actually kind of interesting here is you can see this really large move from 20 cents a share. So, you know, penny stock here, and where it's trading at here, it closed at $1.57. So in a month and a half's time, we've seen these just monster moves. And what is interesting is now that they're entering in this crypto mining space, it actually looks very similar to the Bitcoin chart. So perhaps potentially with this increased volume, we're seeing this trade very similar to how we're seeing Bitcoin trade. Now, what I mean by that is, if we just relook at a chart of Bitcoin, you can see this dip into the 50-period moving average, came up higher to an all-time high, curled back down, and then started moving higher again. Very similar. We saw that dip, and then we saw it run up to an all-time high here, and then we're seeing that dip and kind of curling back around. So, it is interesting to see that this is trading very, within a tight correlation here to Bitcoin, so it could offer up some really good potential, but just know there's a lot of risks, especially investing into or even trading the pink sheets or the OTC markets. You might have access to the Canadian Stock Exchange as well, but it is nice seeing the increased amount of volume, and the chart looks very similar to Bitcoin. This could be potentially due to the fact of their crypto mining initiative to bring in additional sources of revenue into the company. Now, if you want to find out more about HLLPF, I would say do your due diligence by looking at their website and clicking on the investor tab. And what you can do from that point is download their corporate presentation deck, and you can look at the potential opportunities there for HLLPF. You can even download their app and try it out, see if it works for you and it's something that you want to learn more about. But that is all I have here on HLLPF. Hope you all have a very good day, and I will see you on the next market brief.